Right, so this was definitely a long time in the making. I had to make another one. There's a lot of stuff that I needed to add and remove and clear up. All right, so with that being said, let's not waste more time and begin. Okay, so these are the current timeframes I use. Now, you don't have to use all of these timeframes. I only use them for all the different strategies I have and currently making. Now, the reason that I wanted to add this part here is because I know a lot of people are just going to ask. I know you guys are going to ask. Some of these timeframes I use them for entries. Some of these timeframes I use them for different analysis, like multi-timeframe analysis. Just depends on what I'm doing, okay? But you don't have to use them. You know, there's not a reason in particular either why I have like a 2-hour or a 6-hour time frame. It's just for some reason I decided to use a 2-hour. I can't really remember why, but I have it. Okay, I don't even think I use it anymore, but I have it just in case. All right, so let's move on. All right, so I know that a lot of you are probably wondering what time frames actually matter. Now here's the thing, it depends. The main reason for choosing different time frames is that each one gives a unique view of the market, bringing its own opportunities and challenges. For instance, shorter time frames, like those used in intraday or scalping strategies, are about catching small price movements within a single day. Traders who use these methods often look at minute by minute or even hourly charts. Now sometimes they even use seconds time frames. It just depends on how good you are. Well, I don't know if it depends on how good you are. Honestly, from what I've seen, it just takes experience, right? So if you have seen my interview with my first student that I mentored, he trades a lot on the seconds time frame, and he's only been doing this for like a couple months, and he's already funded. So I don't know exactly how he does it. I think he explained it to me, but if you want, just look at that interview. It's really, really interesting. In contrast though, longer time frames, like those in swing trading or position trading, span several days to months. Traders with this approach focus on daily, weekly, or monthly charts. Now, that's the typical thing that they do, right? Now, some people for swing trading also use something like the 4-hour and up, right? So I have a 4-hour swing strategy that you can look up right now if you're working a 9 to 5, and it does, depending on how you entered or when you entered, it can take a couple of days, maybe a week or two, but personally I don't think it's ever lasted months. All right, now some traders may use time frames that range from minutes up to months, applying them to both scalping and swing trading depending on their goals and style. So if any one of you has seen something like I think like Sir Pickle's trading, I've seen him use the monthly chart and scale it all the way down to like a 5-minute entry, and I think even a 1-minute entry. So that just goes to show you that it's all subjective, guys. It's all subjective, and it's only relative to what you're doing and the strategy that you're making. If you want to use a higher time frame, like a monthly time frame, as part of your multi-time frame analysis to find trades on the 1 minute or even 5 seconds time frame, then that's up to you. But is it necessary? No, it's not. I've seen people like DTFX that only uses like the 1 minute as his highest time frame to trade on, and I believe that's it. I think he said that on an interview. So that just goes to show, guys, that you don't need to do all this crazy multi-time frame analysis / research. It's all subjective. It all depends on what you do, what you're comfortable doing, and your type of style of trading. So let's move on. Now, I know some of you are also wondering, well, what time windows matter, or what trading windows matter? From what time to what time should I be trading? Now, here's the thing, you don't need a specific time window unless you want to have one. What I'm going to show you are time windows that people usually recommend, or things that ICT recommends, but you don't need them. You don't need to trade or be confined to a specific time window. Again, it just depends on what your strategy says, what your backtesting data tells you, okay? Because maybe your strategy might not work really well in these kill zones or macros. It might work outside of these time zones, okay? So just remember to backtest, which is the most important part. But if you do want to use a specific time frame to trade, then definitely pay close attention to this portion. So kill zones. Kill zones refer to specific time periods during the trading day when institutional traders are most active, leading to increased volatility and potential trading opportunities. these periods often coincide with the opening and closing of major financial centers around the world. Now, this is something, again, ICT made. It's very, very interesting. It actually works really, really well, surprisingly. So it's definitely worth checking out, okay? Now, macros. So macros in ICT's methodology are specific time intervals within the trading day when price movements are more likely to occur due to its increased market activity. These time periods are believed to be when large algorithms seek liquidity or fill fair value gaps. Now, these are much smaller time frames. These are more to around 10-minute windows, 30-minute windows. Kill zones are more hourly based windows. So they're a couple hours bigger than macros are. That's why it's called macros. But they can both technically be applied for the same thing. Okay. Now, to give you a little bit more info, here are some key features of ICT macros include specific time intervals. ICT macros focus on particular times during the London and New York trading sessions. Price volatility. These periods often experience increased price volatility, providing opportunities for traders to enter or exit positions. Liquidity and imbalances. Macros help identify points where the market is seeking liquidity and correcting imbalances. Now, that is the main feature or key point of macros. Now, like I said, when it comes to kill zones, it's mainly just trading windows. All right. Now, examples of ICT macros. Now, here are all the macro times that I believe are correct. So you can trade during these time periods and you can make a strategy around these specific time periods if you are very, very constrained on time. All right. Now, here are the times for the kill zones that you can use. Now, it's very important to note that these times are typically given in Eastern Standard Time or New York time. Traders should adjust these times to their local time zone for accurate tracking. Additionally, for indices trading, there's a slight variation in the New York session times. New York AM session 8:30 a.m. to 11 a.m. New York PM session 1:30 p.m. to 4 p.m. All right. Now, some people trade from 7 a.m. to 10 a.m. sometimes when it comes to the New York kill zone. Some people trade from 7 to even 11 or 7 to 12. All right, it's what you want to do. I recommend just sticking to the 7 a.m. to 10 a.m. in my opinion. Okay, my opinion. Now, trading application. Traders using ICT's methodology aim to capitalize on price volatility during these specific times, identify liquidity pools and price imbalances, align trades with higher time frame narratives and lower time frame executions within these macros. That's basically saying using a higher time frame to see where price is going to go, to target areas of potential draws on liquidity, and you would use the lower time frames like the macros to find your entry. Okay, and then from there you would essentially write it to the higher time frame point of interest. And people also use these methodologies to anticipate market movements based on the behavior of price during these intervals. So basically saying that during this specific time window, price will usually do this or price will usually do that. Okay, very, very easy, very simple. Okay, so this is just an example, guys, just an example. This is not an actual strategy of mine, well, at least not yet. I don't know how I would use different time frames as the scalper. Okay, so this is just an example. So you could use the 3 to 4 hour for your session/daily bias. After traders identify the overall market direction, they can use the insights to shape their trading strategies. They might choose to enter trades that follow the trend, or if they believe the trend is about to reverse, although don't trade reversals. They could trade against it, though this approach carries more risk. Now, from the 3 to 4 hour time frame, you can drop down to the 1 hour for finding points of interest. So this is just areas that you think price is going to tap into or head towards to. So look for key points of interest like order blocks, breaker blocks, fair value gaps, or any other markers that align best with your trading plan. Okay, it has to be with your trading plan. Lastly, you can use the 1 to 5 minute time frame for scalping. So this is where you will find your entries, right? So this is where you'll look to enter a trade using any confluences that fit your strategy. Just be sure to backtest it with at least 100 to 300 trades before using it on a live market. Please actually backtest your strategies before using it live. It is so dumb and so ridiculous to me that people are actually making up strategies and not even back testing them, or back testing them enough. They're only doing like maybe 30 trades and say, yep, yeah, it's good to me, and then they hop onto a live and they blow the whole freaking account. It is insane. Please don't do that. And another thing, do not listen to some random Forex guru saying that his specific strategy is the only profitable one because he has special time frames that he uses, and only between these time frames is the only way to trade any strategy or to find any profitability. Don't fall for that crap, please. This is all subjective. Time frames are all subjective. It just depends on you as a person, and it depends on whether or not you have enough data to back up your trading strategy. All right, please don't buy courses. It's a waste of time. Okay, let's move on. Okay, so what should you do? Consider how much time you can commit to trading. If you have a full-time job or limited availability, shorter time frames may not work well since they require constant monitoring. In that case, longer time frames can be a better choice because they allow for more relaxed decision making and don't need as much attention. Reason being, guys, is because with higher time frames, each candlestick has more data, and the more data you have, the more reliable that candlestick can be. All right, each candle can be more reliable the more info it has. You might also consider trading in a different session, like New York, London, or Asian markets, to fit your schedule. Once you know what type of trader you want to be and which session suits you, it's time to create a trading plan. So if you decide to be a London trader and you want to be a scalper, make a trading plan based around that time. Now, if you don't have a particular session in mind, or you don't care to trade in a specific session, then just, become a swing trader. If you have like a 9 to 5, you can just use one of my swing trading strategies that is fully back tested, basically mechanical, and just a great strategy overall. I highly recommend you check out that video. I give everything I know on this strategy, fully vetted. You can trust it for sure, guys. Okay, so the hard heavy lifting work is already done. The only thing that you have to worry about is getting your psychology down. All right, so let's move on. Now, if you are wondering what other strategies are there for my style of trading, right? So let's say you're a swing trader or a scalper and you're wondering, well, what else is there that I could use? You can do price action trading. You can trade with moving averages and oscillators. There's tape reading, breakouts, all types of ICT concepts, supply and demand. They apply to both styles of trading, right? You just have to either make your own or find someone that already made a trading strategy around your type of style of trading. All right, it's not that complicated. Some people make this a lot more complicated than it has to be, but there are plenty of good strategies out there. Even Sir Pickle has one. I love his videos. I think he has one of the best swing trading strategies that you can learn using ICT concepts. You can look at Toy Trades' channel. She has pretty good content there too, but she trades with chart patterns. That's the only thing I don't like, but it seems to work for her. So there's many ways, guys, to make money in this game. You just have to pay very close attention. All right, so you made it to the end of this video. Thank God. So before I go, y'all, quick reminder, don't forget to join the Discord. Find me on Instagram, Twitter, email me if you have to. If you have any questions, let me know down in the comments below, or anything you'd like to see or would have liked for me to touch on. Definitely put it in the comments. And yeah, if you have any questions, join the Discord, ask me questions there. I'll more than likely respond to you on the Discord a lot sooner than I would anywhere else. Okay, now before I leave, here is a little quick biblical wisdom. Don't skip this, man. Don't skip this. This is from Ephesians 5:15 through 16. Now it says, look carefully then how you walk, not as unwise, but as wise, making the best use of the time, because the days are evil. Ladies and gentlemen, don't waste your time learning stuff that you're not supposed to. Learn good things, learn wise things, learn intelligent things. Don't waste your time listening to the Hawk Tua podcast, man. That's just gonna rot your brain. All right, don't waste your time. Please seek wisdom, seek godly things. Don't give up. Don't be weak. Be strong, because there's still a lot more to look forward to in life. And if you stick with God, only He knows how much more He can amplify the things you learn and the things you can do. All right. So with that being said, guys, I'll talk to you guys soon. Keep an eye out for more content, and I will see you guys in the next one. Peace.